All right, guys. So today we'll be discussing about trend entries, trend entries. I'll be showing you typically how I enter into the market. What I want us to do is, after watching this video, try to go down to my YouTube channel and watch the full video on the entry patterns I use, so you'll be able to understand them, because I won't be talking about market structure here, and I won't be talking about the multiple time frame sequence. I'll only be talking about the ABC. So in order for, just to make this video short, so in order for you to get the full ways of how I enter the market, you have to go down to YouTube to watch. Now, this is it. Every trend starts with what I call M or W, depending on the trend. This is for a downtrend. A downtrend will start with M, and the M will form an ABC pattern. This will be the A, this will be the B, and this will be the C. And now they do what? They drop price. The trend continues. This is how the trend moves. This is it. Now, every trend will also end with a reverse what? ABC. A, B, and C. Now, this ABC is the reason, is how I do enter the market. I must enter every market based on this ABC. Whenever I don't enter based on this, I either have a loss or I minimize the, or I either have a loss or, yes, a loss. I do have a loss. Now, this is the core reason why the market moves, changes direction. And this is the main reason why we have a retracement, a reversal of this particular move. So in a nutshell, a trend starts with this ABC formation here and ends with another up in the inverse of the ABC here in the lower, there below. So for an uptrend, this is an uptrend. When we have the ABC, the market keeps going up, down, up, down, up, down. Remember the impulse and the corrective way we did yesterday. Now, and the market do under what? A, B, and C. A, B, and C. Now, this is it. This is it. This is what I enter the market, how I enter the market. I enter the market using A, B, and C. Now, what is A? A is a break of the market structure region. Look at the market structure. That's why I say you need to understand market structure. This is the market structure, a break of the market structure. B is a close above the market structure. Then C is when price close above what? The lower of B. Now, this C validates my entry and I enter the market. Now, this is how I enter the market. So I'm going to go down and give us a typical example with my chart. But before then, let's talk about the second one. Okay, let's talk about the exit. I'm going to put the two of them together. The exit. I exit the market when I spot this, a middle close bar. This is a middle close bar, or another, a middle close bar on key level area. You can call it your hammer or your arami, but I call it the middle close bar. And that is when price closes at the middle of the bar. Now, this is a middle close bar. The length of the body is equal to the length of the wick, or the length of the wick is bigger than the length of the body. This is how I close the market. So if I want to buy, if I'm selling the market down to this point, when I see this at a key level area, I know it's time for me to close. Then price go back to this, or when I see this at a key level area, I know it's ready for me to close. Come down again. When I see this at a key level area, I know it's time for me to close. So this bar is what I use in existing the market. That is it. Now, the second one, if you watch the video on YouTube, you get to understand the second one. And the second one, I already said it, is what? Based on this A, B, C pattern. So let's go down to our charts in the next video for me to be able to show you how it works. Thank you.